Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host Joel Alconin, along with Brianna Velasquez, and we have Serge Berger on the line, head trader and investment strategist at the Steady Trader. Serge, how you doing this morning?
Joel, good morning, sir. Has summer reached Michigan?
Well, if you consider 49, 50 degrees summer, we hit that over yesterday morning, but good support there at 50. We're climbing back up into the 60s, so hopefully by the end of the week we'll be in good shape. Wanted to start out with you just talking about, interest rates and the Fed, and, I've had some nice moves in the TLT. I mean, if you're looking at the economic data, to support raising interest rates, Friday's numbers wouldn't really point in that direction. Give us your take on those numbers, the bonds, the volatility in bonds, and the jump in bond yields.
Yeah, I agree. I don't think the data is there. But sort of like we said last time I was on, was at pre-Memorial Day. I do think, there are two things at work here. For one, the tendency is towards a rate rise. So even just that sort of is a structural shift in the thinking, and I think a lot of folks aren't yet positioned for that. It's not so much, the ultimate rate of the pace of the hike. I think that'll be slow. I think it's more just when they actually raise the rate. So structurally, there are a couple of things at work here. For one, much less liquidity out there in bonds. Like when I was trading bonds, bond jobs was, like everyone was working in bonds. Now those desks are a lot thinner staffed. And at the same time, you have a lot more issuance, lot more inventory basically out there. So all that has to be managed somehow, and I do think that's going to, lead to some sort of liquidity squeeze at some point once these rates start ticking up just a little bit.
Okay, and we're obviously going to get the jobs number on Friday. We'll see if that comes out with a hot number. Just, what are you looking for out of the jobs number?
I'm not specifically looking for a number, so to say, but I do think we'll see something that'll probably uh, keep the Fed from saying anything hawkish. Let me put it that way. That's to me the way I've talked about it to my subscribers and clients over the past couple of weeks. I think there's two potentially dovish points out there the next 3 weeks now, i.e. this Friday's May jobs report followed by the FOMC statement. I believe it's in the 17th of the month. I don't think those are going to be hawkish things. So to me, stocks at the margin should be able to hold up through that, and bond yields should probably remain somewhat in check here. But it's more beyond that where I have my concerns. So the deeper part of the summer into the autumn.
Okay, taking a look. I mean, obviously, if you do get a move up in interest rates, or at least at this point, just the anticipation of the move interest rates, it's really taking its toll on the utility stocks. Take a stock like Duke Energy, who got upgraded today here, way off its all-time high that it made back at the end of January. Is it time to start dipping your toe back into the utilities and get that nice yield, or just wait to see when the Fed finally makes a move, then maybe they crush them and then you step in?
I personally, being somewhat more risk averse, I would probably do the latter thing. I haven't seen a real sort of, change in the rate in sort of the rate of change, if you will, sort of the second derivative here for these utility stocks. So to me, I'd like to see a little bit more confirmation there. Whether we need another breakdown or not, I don't know. But I don't know, man. I just generally feel like it's all so much interest rate dependent. And if you look at the lack of volatility in equities, it just, and then some of these readings out there of consumer or investor sentiment, so many people are basically indecisive, and that to me doesn't speak for me to have to buy utilities here. I just think we could easily get that washout, as much as we could see a breakout here at this point. It's just we need to see something happen before I want to do something. I'd rather be reactionary than anticipatory.
You've been around the street for quite a while. You've seen, the market go through different phases, have different drivers, and boy, oh boy, financial engineering and the urge to merge is really probably as prevalent as it has over the last 10, 15 years. The Intel Altera data, a merger of two giants here. Does that give you, any reason for cautious, or do you just flow with the markets?
A little bit of both, but I am a little cautious. I mean, it's the fact of the matter is that these deals. I mean, what was the other big deal like last week or 2 weeks ago? Also in the same space.
Broadcom and
Uh,
Amago.
right. There you go. Exactly. And so to me, it's a little bit late stage stuff. We're late cyclical. When you see all these M&A things, I think it's sort of the last hooray before we see a better washout. Again, I'm not calling for all doom and gloom like market crashes, but I just really feel it's a little bit late to the party, and I wouldn't want to chase these things higher. Like look at the SMH for example, or the SOX. I mean, that's some sexy moves there over the past let's call it week and a half or something like that. I wouldn't want to chase that higher. I just don't think we're in that high momentum environment, and it's mostly because people are indecisive.
Rob Hood popping up in the chat here. Merck had a nice move on Friday off some drug news. Looks like we're getting a little follow through today. Boy, there's a level sticking out in your head, just over 61 here.
Mm.
Could you give us your take on Merck?
Yeah, I was actually looking at work this morning. I was about to put it on the watch list for for clients, but then I kind of pulled back and I said, it's one of those deals where purely technically, look at the gap up we saw on the 28th of April, right? So then basically that got us above all the medium term moving averages. So that was nice. I suppose that was earnings, or something like that. Then we consolidated ever since, and we saw a little pop on Friday, but we haven't really cleared out of it. And so to me, it's a game of probabilities now. So given the lack of momentum all year long, why would I want to chase something now that hasn't even broken out yet? It hasn't worked all year. So, I need to see a little bit of a proof in the pudding before I chase it higher. But I agree. This thing gets above 61-ish and change on a daily closing basis for my time frames. I see no reason why we can't retest the January highs.
And how about that beatdown in Bristol Myers on Friday?
Uh, I didn't see that.
BMY, some bad drug news. They took it down to 63 and change. Did see it back up. Oh, now it's back over 66 here. Uh,
Oh, right.
yeah, I mean, big move off drug news, getting a little bit of recovery today.
Um, you know, single stock news, I would probably be a little bit more focused on the general picture.
Okay.
Again, range bound. Look at where we dropped to on Friday. Bottom of the range this morning. We're up 2.6%.
All
Middle of the
right.
range.
So what's anything here? I mean, market near the highs for the session here. Perhaps a little bit of
Mm.
month beginning. You get those 401ks and stuff. A little bit of a bump here into the market. Is there anything that you got on your buy radar?
Yeah, two things. I still like FireEye alongside FEYE. I popped last week on the back of that. I think it was upgrades in for Palo Alto Networks. That's one stock. Also, I actually think some of the transports, particularly the rails, are actually oversold. Kansas City Southern is the one I'm looking at here. Uh, got smacked down again last Friday. Got back to the March 2014 lows. I think the stock is overdone. Good for a bounce. I want to see some sort of bullish reversal or an exhaustion and get this thing back into the high 90s, maybe mid 90s before it goes back down again. So I think the transports in general are a little bit exhausted here. As much as I see that divergence, and I think that's going to weigh in the market ultimately.
And how would you play something like that? I mean, bumping on the lows of the moves. You look a couple layers here, make a couple stabs by it, cut out if it goes against you, give you another try. How would you play that?
Yeah, so tactically, what I'm looking to do, I want to see how this thing establishes. So KSU, I want to see how this establishes this morning. I'm not a big Monday morning trader. I like to think settle down a little bit. I think a lot of people kind of come in, making their decisions not until later in the day. But I'd like to take a little bit of a stab once I see some sort of establishment here. If we see that, I'd like to, I'll probably leg into like at least say like a 1/3 position, then possibly buy another. If I make it to a full position size, buy another 2/3 or so later on this day, maybe tomorrow or so. and then see if it can bounce. If it doesn't bounce rather soon, I would certainly be back out.
Alibaba here had that sprint over $90. I think we got up to 95 and change here. Now coming back under 90, back to that area where it broke out from earnings, 89.19. I believe that was the high. Had that big range on earnings day. No, 89.29 to 84.91. Broke out, kissed the $95 level, hit 95.06. Now back under 90. What's your take on Alibaba?
So we talked about it last time I was on. I ended up buying it on the breakout. I took, I want to say, three quarters of the position, or I think 4/5 of the position off near the 95,
Wow.
94-ish area. We got, I got decently lucky, but I keep holding about a fifth or to a quarter of the position. And I'm not really concerned about it. For one, it's because of the position size, but also just I think technically that move was important. That post earnings rally on the 7th of May, I think was important. I think we just then ended up rallying a little bit too much, and like anything this year that had any upside momentum for more than a few hours, it usually died out. And the same thing here. But this stock hasn't broken just because of the pullback now. I think it's just pulling back to the breakout area. I'm not too concerned about it. In fact, if I wouldn't have a position, I'd probably look at potentially initiating a smaller one here at this point.
Yeah, it is coming back down to that area. Okay, let's just take a look at a few other of the momentum stocks here. Tesla's been flirting with the 250 level. Any thoughts on Tesla?
Tesla, yeah, I talked about Tesla with a broker dealer earlier this morning. I think Tesla, in terms of it's given me good signs of showing relative strength versus the broader market. If you look at the S&P, it's kind of slightly trotted like sideways to title a little bit lower. Tesla's done the opposite. So it's always nice to see a big momentum go to stock like that hold up. It needs to me kind of show that last Thursday's rally wasn't just a joker. So I'd like to see a little bit more commitment before buying it. But there's still unfilled gaps here. There's an unfilled gap from last November that could get the stock back up to almost to the high 250s. And then beyond that, maybe you can go into the mid 260s. There's another semi unfilled gap up there from a little before that. So I wouldn't short this thing at this point.
Serge Berger, he's a steady trader, investment letter. Any potential shorts out there?
To me, one of the better shorts out there is still something like a Chipotle. I just think that act's so bad. it just can't get any relief. I think last time we talked about the island top that took place in January, early February, and then it basically just muddled through all the way through March, April, then took another leg down, and it just can't get out of its own way. It's just really heavy. I'd probably prefer to short it on a little bit of a bump higher rather than into the hole, but I just don't think this is done on the downside.
Yeah, the burritos, right?
Burritos, CMG.
Mickey D's, let's just talk about that. Someone came out yesterday or last week with $120 price target on this. Not sure what they were looking at in the plan or whatever. Stock's been range bound forever. Is this something you trader get involved in much?
Yeah, every once in a while I get involved. The problem is it just doesn't have a whole lot of momentum. It's not a very sexy stock anymore. I look at McDonald's and I think the first thing in my mind is sentiment. Because everyone talks, every person on the streets in Paris has an opinion about McDonald's stock. Mostly negative, right? But that's exactly the point. I don't think there's anyone out there that likes McDonald's, the food nor the stock. I mean, maybe from like a sentimental perspective, but that's different. I think it's hated, and I absolutely could see it go higher, but it's just not doing anything. I like to trade something this on momentum, and it's just I mean, look at this thing.
I know, I know. It's been like this. I mean, if you go to the monthlies here, you're going back and just think about it in a perspective of the bull market here. If
Right.
you look at this thing, if you bought this thing, let's say you bought it good here in late 2012 at the 85, $86 level, and you're holding on here compared to the market. Does have a little bit of the dividend, so yeah, I have to agree with you on that one on Mickey D's. Just before we let you go, I want to ask you about the House of Mouse here, Disney. I mean, when you make
Mhm.
the cover of Barron's, I mean, you're good for a pop here. Traded up in the pre-market, traded up in the regular session, 111.77 here. What's your stance on Disney, long term and short term?
Yeah, sure. Okay, so long term, I think Disney's fantastic. I mean, I really do. I have no problem buying the stock. I just don't want to buy it at all-time highs. you know, Near term, look at the move since the February gap higher.
Okay.
Very low chop higher. It's almost like a rising wedge type of low volatility move. Looks like the banks in many ways, like the BKX, which is just a low volatility chop higher. I can't buy something like that. The risk of a flush out is just too high. In fact, there is a rising wedge, by the way, if you want to draw that in.
Yep.
So I just can't. It's not sexy. It just isn't. And I'd prefer to trade stuff that moves at this point, or at least where I can define my risk, and I can't really define it very well here. I would love to buy it, but I just can't.
Right.
Does that make sense to you?
Yeah, because it's like in the middle of a. I mean, I could, just by being on with you, I could see, where, like you talked about the KSU. You're trying to buy something that's been beat up. You're trying to pick a bottom. If you go a quarter position and you get stopped out, or you can add to it, it's worth
Mm-hmm.
it. On the other hand, I saw you look at the Merc. You try to get yourself interested in it at a potential breakout, and it just wasn't enough. It is moving up nicely here.
No, yeah,
Yep,
yeah.
we'll see if it can hold the $61
Yeah.
level. All right, well,
To me, it's about, just one second. It's just basically all about patience, and I think this market this year has been extremely difficult for the impatient trader. It's basically cut them to pieces. So I'd prefer to be patient another while longer, because at some point or another we're going to see a break in directionally, and or a move higher in volatility, and then many of these stocks are going to look 1,000 times better in both directions.
okay. We've been on the line with Serge Berger. He is the investment strategist at the Steady Trader and the Head Trader. Serge, thanks for coming on. Pleasure as always. Have a good week. We'll talk to you next Monday.
Thank you, Joel. Take care.